We think that bifurcation that you mentioned is going to continue with Amazon and others leading the charge. We think, most investors are waiting till next year on Facebook, given the margin in revenue deceleration. We went through that with Google just a couple years back, and the stock lagged as they went through that deceleration. So I think everyone believes that it's a great franchise, that they'll come out of this like other tech leaders have, like Microsoft and Adobe in the past. But again, I think that bifurcation ends. We still like Amazon the best in the group. We think they have the best drivers. And again, some of the ad-related names are under a lot of duress right now. And we think, again, around user hygiene, social fatigue, those issues are going to continue to linger into the third and fourth quarter. So perhaps 2019 will be a better setup from our perspective at this point.
And Tim, how about you? I mean, obviously, we also didn't mention that, the semiconductor stocks had been leaders in the first part of the year. They flagged a little bit, too. Do you actually think that it's going to still remain, roughly speaking, a tech-led market?
Well, like anything, at some point, some of these things have to start trading on earnings and real revenue. And when we start to pull back the curtain and see what these companies make, you're finally starting to see some divergence. To echo what Brett said, Amazon still has tons of growth ahead of it, and people value its growth. They really don't value its earnings. The rest of them, really, Microsoft, Cisco, Intel, AMD, those all trade on earnings and dividends and return on capital. And as the market gets more challenging and you have trade headwinds, you have dollar headwinds, I think the street is really starting to bifurcate the whole group. So it looks probably like the growers will keep growing, and those that trade on real valuations might find those valuations having been a little bit stretched.